South Africa has struggled to gain its footing ever since Jacob Zuma was elected president back in 2009. The rand still is in a rout. This gives the story of the rand over time. And basically, white is when President Zuma first came to power. Blue, he got re-elected. You can see the dollar strengthening its rand throughout this time. Green, this is when they had the big problem with the finance minister. They sacked, they had a replacement. And actually, the rand strengthened a little bit. And then all these lines over here are the various scandals that ultimately led with the yellow line to actually the replacement of Mr. Zuma by Ramaphosa. And you can see it actually strengthened the rand, but now it's turned around the other way. Basically what Amo was just telling us about. Of course, Mr. Ramaphosa has set about to change all of this, restoring growth stability and stopping that stream of government scandals that dominated Mr. Zuma's tenure. Welcome now, Bloomberg Intelligence fixed income strategist Damian Sassower, and Kieran Curtis, Aberdeen Standard Investments, is still with us. So, Damian, give us a sense of the task that's in front of Mr. Ramaphosa right now. Yeah. He seems to have the best of intentions, but it's not easy to get done.
Well, it's all about confidence and credibility, right? In emerging markets, but more importantly in South Africa right now. I mean, what Ramaphosa needs to do right now is he needs to enact structural reforms that are going to reduce leverage, improve growth, but more importantly, they've got to attract offshore investment. Their current account deficit is 4.8% of GDP. By comparison, Turkey's is 5.7%. So they've got a problem. They need to fund it somehow. They need to fund it with foreign direct investment, offshore investment. And right now, that's not coming. And in large part, the reason it's not coming is because of land reform and the fact that they can't convince companies like Glencore and big mining companies that they're not going to have their land and their mines expropriated without compensation.
Well, it's a little hard when they've proposed to change the Constitution specifically to allow expropriation of land without compensation. I mean, right? It's supposed to be reporting back at the end of August. So, I mean, this is the ruling party is proposing this.
Absolutely. And corruption's endemic there right now. I mean, I agree with what was just said earlier. I mean, right now, the PIC, the nation's largest public pension fund, $140 billion of assets, they've just been accused of impropriety. In addition to the fact that Eskom, the nation's largest utility, can't fund itself, and there are rolling blackouts going on in the economy, and you can't even quantify the impact of that on GDP.
So, Kieran, what about that? If really what they need is the confidence of the international business community, financial community, what's the route to that? Is there one?
I think there certainly is one, and there have been some really good piece of progress made by the new government in South Africa to try and change, in particular, some of the personnel at the top of agencies and state-owned entities to improve management, improve processes, and make things more transparent. I think, in particular, the intentions of the executive with respect to land reform are actually quite widely misunderstood, especially abroad. I don't believe it's the intention of the executive to change the constitution. I think the executive actually wishes to show that in limited cases it may be possible to transfer land to particular people under the current constitution, as I said, in very limited ways that really will help to entrench investors' expectations about what any new land purchases and legitimately purchased land is able, the fact that they have rights over those holdings.
Kieran, how do you want to buy South Africa right now?
Well, so we quite like the bond market, and we also increasingly like the rand. Both appeared quite overbought in January, and we'd essentially rated the country a buy on dips. We're having a dip, and as a result, we're quite happy to add to holdings here. Yields are pretty attractive. Inflation continues to be on the low side. They increased VAT this year as a means to raise taxes and get the fiscal deficit under control. But inflation remains below target even after that implementation. So there doesn't appear to be a strong case for rate rises in South Africa. But five-year bonds are nearly 200 basis points above the policy rate. So yields are very attractive. We think that can ultimately make the rand attractive as well once the international environment becomes a bit more favourable for emerging markets.